All right, so if you guys, for those of you guys that were in the last daily bias video of the 31st, right? The 31st, we anticipated price to remain bearish because of the current price range that we're trading in, right? If we look at the 4 hour, we wanted to see price stay underneath this 4 hour fair value gap. And um, sorry, it was this one, this 4 hour fair value gap. We wanted to see price stay underneath it, right? We didn't want price to close above this. We wanted price to stay underneath to be bearish. If we go to a lower time frame, you guys can all see my screen and stuff, right? Okay, cool. So what we wanted to happen, right, was we wanted to stay underneath this big 4 hour, right? This is where I was going to flip my bias to long if we closed above the 4 hours PD array, right? If we use the 4 hour as a PD array, you got your discount, equilibrium, and your premium. If price closed and started trading above the equilibrium of the 4 hour PD of the 4 hour as a PD array, that's where I was looking to switch my bias to longs, right? This is where I wanted to take a long, and the long that I would have looked for would have been around this area to take me to Asia, and then after that would have been equilibrium of this range, right? The 50% of this range, and then back to these highs up here would have been my take profits if we closed above the 4 hour. But what we did was what we anticipated, right? We had three different narratives. One of them was we drop below Asia low and continue lower. The next one was what? Was we turtle soup Asia high, right? We come up and we trade above Asia high and then we drop to where? To previous day low. And then we come and we look at our next targets. Remember, we have this big range here from the 20th that we talked about. And our target that we were looking for was the equilibrium of, oops, the equilibrium was one of our TPs, right? And then remember how I explained when we have a big range like this, what I like to use is I like to use the 75%, which would be here, and the 25%, which would be here, right? However you're looking at it, if you're looking from top down, this would be your 0, 25, right? And then your 50, and then your 75, and then your 100, right? And if you're looking at it from the opposite way, this would be your 0, this would be your 100 with your quarters, right? So what I wanted was for us to hit this 25% of the whole range of the 20th, not the range of the market. I only wanted the range of the 20th, right? Because once we traded outside of this low a day, then we attack the next PD array, right? We talked about this last time, and then the next PD array. If we would have traded underneath this array, I would have looked back in time to see what array we're attacking, and then I would have used that array. It was pretty far, right? I would have used that array, which was here, as my next take profit. Just once we break an array, we start trading into the next array, right? The next closest array. So we did, let me remove the drawings real quick and put this back up. So we did exactly what we thought, right? We, well, we did what we anticipated, not exactly what we thought. We created three different narratives. The one that we wanted to see of the three, right, hit. Um, and all we had to do was follow our directional bias, right? This is what we would call a directional bias, where we identify where the market is coming from and where the market, this was our current session that we were doing RTA on, where we anticipate the market to continue going, right? We're in a nice downtrend. We could have seen a reversal here. We could have seen a retracement here. We could have seen a straight drop. We could have had an accumulation day, right? So many probabilities. We picked three. Of the three, we had one favorite, and that favorite hit. And more importantly, what I was explaining to you guys about equilibrium, right? Remember, this is the 20th range, about the equilibrium of the previous day, right? What I like to use is the previous day's range to govern my current day's price action. So this day, right? This was Monday or Tuesday, sorry, Tuesday. So we used Monday's range, right? So Asia high to London low. That's your daily range. This is the PD array, right? That we're trading into once we break the low. If we would have broke the high of this PD array, this range would have been obsolete because we would not have been trading into that range. We would have been trading into what range? To this range here, this one, this high to this low. So when you break a range, just look to your previous range of the left, right, as a daily candle. So what did we do when we were trading at equilibrium of the range? We were accumulating buy stops. So everyone that traded this specific time of the day was long. This is how I view it. Everybody was long. Everybody thought that price was going to do what? It was going to break out. It was going to break out of this accumulation and attack what? The higher day, or it was going to attack higher price. Well, what is turtle soup? Turtle soup is the raid or the hunt of stop losses, right? Of engineered liquidity to go the opposite way. So we have a high here, right? But more importantly, we have equilibrium here. So when price broke EQ and then it started taking everybody out on both sides, and then it finally created its very own range. And it took a very long time, right? But it trickled and trickled and trickled and fell down to our targets. So we're going to do the same thing today. We're going to check out our daily bias. We're going to identify where the market is coming from, where we believe the market is going to go. We're going to build a narrative or two, maybe three. I try not to go above three, right? I try to go two narratives in favor of the way I think I view the market. So if I think we're going to flip bearish, I'm going to look for two scenarios to be bearish. If I think we're going to be bullish, I want to look for two scenarios to be bullish, right? I want two reasons to back my narrative and one reason to go against my narrative. Kind of like fading your own trade, right? I every trader Discord that I've ever been in, I see people say, when we break above this level, go long. When we break up below this level, go short. Price is going to do one or the other, right? And then the trader will say the price did exactly what we thought. Well, it did, but you had two scenarios and you didn't favor one over the other. You just, hey, if we break above this level, we go long. Below this level, we go short. You're not wrong. You're providing two different contexts, two different narratives, but I like to choose which which one I think is going to happen, and then I like to base my win rate, right, of my daily bias, not my win rate of trading, but my win rate of my daily bias based off of my narrative. So for yesterday, I was, we're going to say 100% spot on, right? Because what I wanted to happen was for us to raid Asia high and then to drop and attack previous day low. We did that. The market moved in the way that I anticipated, and I was able to capitalize on that anticipation and identify the measurement needed, right, from high to low, where the market was going to go. So that way I can take my trade and hold it through the whole day, through the hour, 10 minutes, 5 minutes, however long you want to hold the trade. But I anticipated where it was going, right? I gave us three reasons. One of them hit. It was a good daily bias. Not a lot of times are you going to be 100% spot on, but you're going to have your one, two, or three different ways that you believe the market is going to go, which is a good thing to have in the beginning of the day because it helps you identify where the market is going to go towards the end of the day, if that makes sense. And I like to use the ending of Asia, like right now, I like to use that range to anticipate if we're going to do one of the five things that I have in my framework, right? Are we going to take Asia high and then after we take Asia high, attack previous day high? Or are we going to take Asia high, fail to take previous day high, and drop to Asia low, right? Those are two scenarios. The next scenario is are we going to take Asia low, right? Are we going to break through the low and then continue to previous day low? Or are we going to take the low and fail to take previous day low and break the high of Asia, right? So four scenarios. When you narrow it down, if it's not one, if you can't narrow it down to two of those four, then we go into a directional bias where you think the market is going to start here and end here, or start here and end here. So if we go from a framework bias, right? What did we just do? We just took previous day low. So when we take previous day low during Asia, the anticipation of the market going higher or having a bullish run during Asia and London, the probability increases because all of our liquidity is resting at the previous day low and previous day high. That's why those are always my go-to targets every time I do daily bias. It doesn't matter what day it is, if it's raining, if it's snowing, if it's the Santa rally, if it's presidential election, doesn't matter. Every single day I start, my targets are previous day high and previous day low. Previous day low already got realized. And what did we do? We took out the liquidity from previous day low and we used it to run up, right? And now that we've run up, where are we stopping? Where do you guys think we're stopping here? Equilibrium of the previous day's range, right? So we've already done what we anticipate the market to do, which is hit our equilibrium. So now what I'm anticipating is a bullish run up to previous day high. Why am I anticipating that run up? Because one, we already took the low of day yesterday. We already engineered and grabbed the liquidity needed to go higher. Now that we've tapped into equilibrium and accumulated underneath, just like we spoke about trading above EQ here, we can see that it's literally the same thing. The same thing is happening. So we have equilibrium. Remember, it was around here. We've created a high, higher high, higher high, and then we created a lower high, right? And then a lower low, sorry, and then a lower high. We've shifted the market. Now, what have we done here? But more importantly, what have we done here, right? We've created that low, lower low, lower low, higher low. It's the exact same thing we did at EQ here, just the opposite way, right? We've created the shift in the market here, and now we've created the shift in the market here. We've also created it here, right? Where we create what? Lower low, lower low, lower low, lower low, and then we have our lowest low, right? Which all of this is equal. This is our equal low. And our equal low was what? Taken out, and we've shifted the market now. So if we look from a higher time frame context, what have we done here, right? Low, low, low. If we come up and take out this high, what would that offer? That would offer a shift in the structure on the higher time frame, right? So I want to see what we do at high a day. So right now my target is previous high a day. I think this is our draw on our liquidity because of how market structure is aligned. We've taken equilibrium, we've created that shift in structure, right? Where we create this. Everybody knows what this is, head and shoulders. We've created the structure though. The structure is the same, right? You have your low, your lowest low, and then your higher low, which is the shift, which is what we got going on over here. So that probably gives you an idea or a pretty good idea of where I think the market is going to run to overnight or possibly tomorrow, right? High of previous day, which is right here at 524. It's a good 200 handles away, but we've seen NQ run 1, 2, 3, 4, 5, 6, 700 handles in a day, right? So right now we know what our draw on liquidity is. We believe our draw on liquidity is the high of day. What's going to invalidate that? How are we going to get to high a day? How are we going to reject high a day and come back down to low a day? Remember, our draw on liquidity is always low of day, high of day. We've already realized low of previous day. Sorry, not low of day, low of previous day, high of previous day. We've already realized the low of previous day. So now our low of day, right? Our low of the day that we're in now is down here, which is Asia low. Our range is still the same from high to low. We've popped out of our range and traded back into it, right? And now we're tapping into equilibrium. So you can see how we are, if we map it out this way, we're trading above EQ, right? But remember, we're trading the previous day's array, not the previous plus current, the previous day's array. Where are we stopping? To the T on equilibrium. We're not stopping, right? We're accumulating, and we've extended outside. True day open has printed, and we displaced above true day open. Now, two things can happen here. One, we trade back into the range, or two, we trade back into the 50% of this displacement, and we go higher, taking out equilibrium and going even higher, right? So remember, the range that we're trading in is what? Previous day high, which is London, to previous day low, which is New York. Here's our EQ. I still want to see the high realized, right? I still want to see the high get taken out tonight or tomorrow, but how is it going to get taken out? How is it going to get there? Let's remove all of our drawings. Drop our PD array back in here. And now that we know what PD array we're trading into, we don't have to go to the 1 day. We can just go straight to the 4 hour. All right, we can go straight into the 4 hour to see what we got going on, what can take us, what can help prop us up and keep us going to previous day high, because we've already taken the low, right? This was the low, and then this is the high. So if we go from a 4 hour point of view, right, we have had a crazy drop. This drop is real crazy, right? But then look what happened when we created this low, this low. None of these, this specific low is the one that's important. Why is this low important? Because on the lower time frame, we've already started creating that market structure shift to what? To attack the high, which will give us the market structure shift to continue higher to attack this high here, right? Or to attack this imbalance right here. So if we go back, we have this low, and this low. What does that create? It's a little wonky one, but it creates the same type of head and shoulders or market structure shift, right? If we look at it from a market structure standpoint, right, we have one, and then we come up, then we have the next, then we come up, and then we have a high, right? Same thing. So we'll go back, go to our 4 hour. You can see that we're trading into an imbalance. We're trading through an imbalance, and that's what's having us having a hard time, right? This is the imbalance that we're trading against right now. Now look at where we are on the PD array if we map it out as a PD array, right? We're trading above equilibrium of this 4 hour PD array, right? The 4 hour fair value gap is the PD array. So what I would love to see is, I would love to see us trade above this 4 hour, and then continue higher, attack this open of the 4 hour, excuse me, break to attack this wick, drop after we get outside of the range of this candle, right? This candle body, trade higher and attack this this body, and then finally attack the wick up here. So I'd like to see market structure continue bullish, and I want to see us trade above the 4 hour, right? Above the 4 hour 50%, and then continue higher and higher and higher, displacing above these key levels. This specific 4 hour, the top of this 4 hour fair value gap, which is 373, 372. I want to see us create what? That fair value gap on the level, and then come back and trade into it, and then outside of that range and continue higher. So let's get rid of the red markings real quick, and we'll go to the 1 hour, and we'll see what else price is doing that can confirm our bullish sentiment, right? If we look at the 1 hour, what do we have? Excuse me, what do we have going on that can potentially keep us upright? Where's our last line of defense before we go bearish, right? We know one scenario of going bullish, which is we take out this 4 hour and we continue higher. That's our one scenario to go higher. Let's look for one scenario to be bearish, our last line of defense, if you will. We have a 1 hour fair value gap that dropped us down. We dropped down to it, literally to the T, right? And then price used it as support to go higher. So I'm going to use this specific 1 hour fair value gap as my point of no return. If we close underneath 270, right? If we come back from where we're at now, fail to close the 50% of the 4 hour, right? If we just drop and then we come back up and we stay underneath 270 or the 50%, which is 278, I'm looking for more of a bearish structure. So those are my two directional reasons that I believe, how I believe price will get to Asia low, or how I believe price will get to previous day high, right? And then previous day high, if we map it out, previous day high is, and then previous day, or current day low, sorry, not previous, current day low is 21,122, 21,522. So we're literally smack dab in the middle of price. Now, once price gets to this area, right, we can look for another trade. We can reassess the market and look for a reason to go higher, or a reason to go lower, a reason to reverse, or a reason to reverse this way, right? But for now, what we want to see is, we want to see price, how it reacts during London, right? When London opens up in a couple hours. We want to see how price reacts during London, because I do believe we still have some more accumulation ahead of us. I think maybe there's like another 30, 45 minutes of accumulation before we start displacing and getting some injections of liquidity. Let me see if there's any questions. I kind of went a while before asking any questions. I'm drunk, not gonna lie. That was supposed to be yesterday, bro. You're good, bro. You're good. For equilibrium of the move, Sep. Why would that be the case though? If the orders were taken out, why would we be looking at the 50% of that? The 50% of what? The 50% of previous day, Sep? The 50% of the 50% of previous day is your compass for price accumulation and for the manipulation of liquidity to be engineered. So the 50% is your VWAP, right? The 50% is your money line. The 50% is your fair value. That's where I believe that of the PD array that we're trading, right? We're trading in the one that we're governed by. Right now, we're going to be covered by previous day still because we traded back into the range. I believe that that 50% is where the market is saying that it's fair. And since it's fair, it needs to accumulate orders in order to generate a move, right? It needs to accumulate longs and make you believe we're going short and then spike short, turtle souping, right? Inducing your shorts and then going long, right? Or vice versa, it accumulates above equilibrium and it makes everyone think we're going long, but it's just accumulating shorts and then it reverses on you. It takes you out turtle soup way. Of course. How big of a stop loss am I thinking? For what trade? Like if I wanted to go long here, if I was to take a specific trade right now, like let's just say I want to just take a long right now, I just want to go long. I'm always gonna look for the invalidation of the PD array that we're trading in. I'm gonna look for that 25% or that 100% as a stop loss. So to give you an example, let's say we're trading in these PD arrays, right? These are the PD arrays we're trading in. This is just an example. And my entry is long. I want to go long here at equilibrium of this PD array, and I want to see price trade out into this array and then finally keep going into this array. Well, my stop loss is going to be according to the 25% or the 100%. And if I'm trading NQ, it's going to be shorter, right? If I'm trading NQ, if you go 10 20 handles, you can burn yourself out real quick, take your account out depending on how much you size in. You're going to get liquidated if you get 10 20 handles out, right? If you're trading a micro, you can have a little wiggle room, right? And you can use the whole range of the discount as your stop loss based because your target is based off of what? Off of the premiums, right? Your target's going to be based off of this premium. That's TP1. That would give us a 1-to-1, right? And then if we don't take our profit, if we hold it to our next target, that would give us a 1-to-2, right? And then if we get big balls and we hold it against our next one, right? This one would give us a 1-to-2.6, right? So it's based off of if you're trading micros or if you're trading minis. If you're trading micros, you can have a wider or a looser stop loss, but the stop loss is always going to be the PD array that you're trading in. So again, to answer your question, if I had a trade right now, if I was trading right now, my entry would be what? Based off of what I explained. The PD array, right? We're trading in the 4-hour PD array. My stop loss would be where? Would be the low of the PD array or the 25% of the PD array based on the width of the handles. So if we look, right, if I do 25%, that's 14 handles. That's pretty good for an NQ stop loss. 14 is not that bad if we go 1 NQ. If you go anything above 1, you're going to hurt yourself, right? But let's say I'm doing M and Q, right? I can go all the way down to the low because my targets, right? What would my target be? My target is not EQ because that's what we're trading in. Our target is going to be the 25 or the 75%, which is the 1-to-3. What's our next target? Our next target is going to be session high, right? We always use our session highs as targets. That would put me at a 1-to-5. My final target realized is going to be what? Previous day high, which is a 1-to-6. So if I was to get in here and hold it all the way to previous day high, I can catch a 182 handle run. I don't know what that is in ticks. It's like 182 times what? 4. So 182 times 4. That would be a 728 tick run, right? If we map it out this way, right? We get in here, we use the PD array low, the PD array that we're trading in, right? We're not going to use this PD array, which is the whole range. That's insane. We're going to use a nice tight stop loss on the PDRA that we're trading in, which is the 4-hour. Hopefully that makes a little bit of sense. So now that we know where we want price to reach, up here or down here, right? Now we look into how are we going to get there, right? And we've already talked about it, and I've explained to you guys what we do at session highs and session lows, right? Where we create the fair value gap. That fair value gap is very important that we create when we take a key level, because that gives you the visual confirmation of the fair value gap that gives you visual confirmation of the displacement. The direction of displacement is going to continue. So for example, right now we're on the 1 hour, right? So right now, what are we doing? On the 1 hour, we're displacing, but what are we displacing through? Our equilibrium. Very important, right? Equilibrium is where we like to frame is where we're going to start liking to frame our trades. When we create another candlestick here, that creates what? That creates our fair value gap. But more importantly, what is inside of that fair value gap? It's our key level. So when our fair value gap is created, when we trade into the newly formed PD array, if we trade back into the range, we can use that as an inverse to go lower. If we fail to take the 50% of that fair value gap, we will trade higher. We will use that very important equilibrium or session high or session low or daily high, monthly low. We'll use that key level as an indicator to go higher or lower. Always. It happens all the time. That's how you identify displacement continuation versus a liquidity sweep, right? This right here on the 1 hour is a liquidity sweep, right? If we go down to our entry time frame, which is the 5 minute, what did we do, right? We created a fair value gap on the key level. Let me get rid of the drawings. This is your fair value gap on the key level, right? And here's your key level right here. Look, where does the key level fall? Coincidentally on the 50%. Is that a coincidence? Maybe, right? If we erase this and map out the fair value gap, look at how the candlesticks, right, reacted to the 50%. Once we broke above the 50% and closed, right? Again, this is just a PD array. We're just going to map it out this way so it makes sense, right? Once we broke above equilibrium and we traded above equilibrium, where did we go? We continued higher above that PD array. We displaced at our key level, we displaced, but then when we traded back into the range or above the PD array, right, the PD array equilibrium, when we traded back above it, that was your indication of what? That this was a liquidity sweep and not a continuation of displacement. If we would have been a continuation of displacement, it would have looked like this one here, which is we created this gap, right? This little gap we created from here to here. I like to use the bodies, not the wicks, but we created this gap. Look what happened when we map it as a PD array, right? We closed under the 50% and we had a real hard time closing back above the 50%, staying closed above it and trading outside of the array. We had a very hard time trading outside of the array. We use it as resistance twice, right? Your resistance or your support turned into resistance, and then look what happened. We displaced, and when we displaced again on that key level, right? This is your opening candle right here, this little body of the wick, this little point of the wick. Once we traded underneath the point of that wick and continued lower, the displacement was continued, right? It was a continuation of this displacement, this one here, right? We displaced here. We'll do it again, but in the form of a candle. right? There's that. I know it's a lot of PD arrays, guy. I know it's a lot. It's a lot. So once this displacement candle took what? Took the gap, and we failed to close above the 50%, what do? We displaced more. Continuation of what? Of the displacement. So then we dropped and we created this big displacement candle, which was what? The taking out the key level of previous day low. We displaced, traded back into the range, failed to break below and continue the displacement. So we reversed and we traded and gave the whole down move back as an up move. Here, we'll do another example real quick so I can show you guys what I'm talking about. Pretty sure that one was pretty good, but we'll do another one. Get rid of the drawings. So we'll use yesterday as an example, right? Look at this displacement, right? Displacement is this big continuation of candles. Where do we displace above? Asia. What fair value gap was created when we displaced above Asia, right? We created this fair value gap here and this fair value gap here, right? That's your fair value gap. Let's map them out as a PD array, right? This is your fair value gap that was formed first. Never closed under the 50%, right? Now let's use this PD array as your fair value gap. Failed, right? Look at all these failures. Failed to close under the 50%. That's giving you the anticipation of what? Of price continuing bullish structure. But if we look at the key levels that were created, this is the key level, this is your key level, and this is your next key level, right? If we do bar replay, that's Asia getting taken out by London. London took Asia out, right? So here's London high, and then as we go forward, let me just go forward real quick. As we go forward and we take that high out, did we displace and create a fair value gap? No. So we dropped back into the range, but we're held up by this PD array. Then when we come back up to attempt to displace again, were we held up by the fair value gap that was created? No. We created more bullish structure, but we were just accumulating stops here. We failed to create the fair value gap here. We created a baby fair value gap, but immediately traded back into the range. This fair value gap that held price, right, held price above Asia, when it got taken out here, we look to the 50% of that range to hold it steady, right? Came back up. Let me just do a regular play. We came back up, right? Here's the fair value gap. Another fair value gap here. This fair value gap was where? Was us trading back into the range. These two PD arrays right here held up price, but once we broke and tapped into one, and then we finally traded underneath the other, traded what? Back into the range. Then we didn't dump, but we started dropping and dropping and dropping. And then throughout the whole day, let's just get rid of the bar replay. Throughout the whole day, we ended up just dropping. But look at the final respect on the very last attempt to go higher. Failed to close above the 50%. So if we look at current price, what are we doing? We're trading above that equilibrium range. We've accumulated stops. And we're trying to realize what? We're trying to realize that dole overnight. Right? And go 4 hour. Here's that 4 hour PD array we talked about. We still have an hour and 9 minutes on this 4 hour candle. Price can still come all the way back down. But as of now, it's still going and doing what we believe. Right? If we go to the 1 hour, also 1 minute, sorry. If we go to the 1 hour, we can see here price is still fighting that imbalance. We want to see what? Displacement, return, fail to take the 50% and go higher. That's what we want to see as a retest entry to take us to our realized goal. Of course. Just reading the chat. So tomorrow, what am I looking for? I'm still looking for price. I'm still looking for how price trades around equilibrium. We're at EQ right now. This is a very pivotal moment. Why is it a very pivotal moment? Because this is where market structure is going to either shift or it's going to create a crazy dump overnight, which we have been doing, right? Overnight, we've been dumping. So here's Asia, we dumped, right? London attempted to bring some back, but what did we do? If you remember the last daily bias, we hit EQ and we dropped. Same thing happened here, right? When we created the new day, Asia, same as this day, we dropped. London attempted to go higher, couldn't break the equilibrium of Asia, right? Asia could not break the equilibrium of previous day, and we dropped. And then we had yesterday, right, where we attempted to take the previous day's equilibrium again, and we couldn't, and we dropped. So now where are we at? The difference in price action tonight that's different from the last 3 nights is Asia on these 3 nights, on these 2 nights, sorry, these three, 1, 2, 3, dropped, right? This Asia accumulated, still a slight drop, but accumulated before trying to rally and dropping. What did Asia do today that it did not do the last couple days? Asia is in an uptrend. Accumulation, downtrend, downtrend, downtrend. The way the session is acting is giving me more confidence in bullish price for tomorrow. Not because it's the second day of the year, not because, I want to see a bullish new year, because of how the market is treating the sessions. Drop, Asia, attempt to reverse during New York, failure. Drop, Asia, attempt, failure. Drop, attempt, failure, right? Accumulation, higher price, failure. Now what? Uptrend. Now we have a little uptrend going. So we have our low, our lowest low, and then our high, which is that framework I showed you. So let's go back real quick. So that's what I would like. That's what I would like to see price do. I would like to see price treat this 4-hour fair value gap, right? It was a 4-hour bullish fair value or bearish fair value gap. Treat that as an inverse to go higher. Not the 1 hour, right? Remember, the 1 hour is where we're going to flip to bearish if we fail to take price higher. If we fail to take price higher, I'm looking for what? Excuse me. I'm looking for this 1 hour fair value gap to fail and for price to trade under it. So I'm bullish because we're above EQ. I'm bullish because of market structure, right? What we talked about. I'm bearish under 270. Under 270, I'm bearish. Currently, I'm bullish. And the way I want to see price get there is a retracement to the 50% of the 4-hour fair value gap and to use that as an inverse to go higher. Do you guys have any questions? Those would be my 2 narratives for tomorrow, but I'm leaning towards a bullish day. Nothing? It's cool with me. No questions, it's cool with me. If you guys don't have no questions, I'll stop the video.